Welcome traders, my name is Adam Harris, Chief Market Analyst, and let's just have a look at the economic calendar for the week commencing Monday the 5th of August. So first of all, I'm going to be focusing on the PMI data coming out of the US. Yes, we have a big market correction in play at the moment, so possibly there might be some more sensitivity towards PMI data or ISM data, but again, it's just more PMI data coming out of the US. There is a potential interest rate decision. I think it's unlikely to change at this time, and of course, we've got construction PMI data coming out of the UK on Tuesday. So Monday and Tuesday are going to be relatively eventful for the pound. Out of interest, I'd love to see what the house pricing index is going to look like on Wednesday, and pretty much then for the US, the jobless claim. So that'll be interesting to see if there is a big shift on any of the kind of core stuffs right now, you know, in terms of fear of the consequences of inflation or deflation or any kind of rate hikes, rate cuts. So the market's focusing predominantly on any types of things that could give clues as to the stability of the economy. And so jobless claims would be one of those. All right, that being said, let's go to the charts and have a look at what's going on there. Okay, so for the first time in absolute ages, we've got a little bit of action happening on the VIX. We can see that we had a relatively eventful week last week, so the volatility increased by quite a substantial amount. So looking at it here to give you some perspective, we really have had a pretty quiet year, and we haven't had this kind of volatility going all the way back to sort of 2022, and we had a relatively big move to the upside. And of course, I really start to take note when it hits that 30 level. And for now, we've kind of closed relatively low. We did have a big spike up. I want to see what happens this coming week if we continue to move to the upside. But it is worthwhile noting that finally we're starting to see a bit of activity there. What does it mean? Does it mean we should panic and run and say the sky is falling? No, that is ridiculous. We don't need to be doing that at this time, but it does mean that there is now essentially, there is something going on in the markets and something to be paying attention to. So possibly becoming more cautious with regards to our risk management plan, possibly more defensive than we have been in the past, and just as I said, a little bit more cautious there. So let's move on and have a look at that dollar index. The dollar index also had a relatively weak week, so to speak, fell through that support level. So I'm going to get rid of that. We don't need that anymore, and came down to the next level. We're down at 103. So will we see if there's a bit of a move up? I would expect at least initially a bit of a retracement and then potentially a continuation to the downside. When you look at it from a monthly perspective, you can see we're at the top of this range. And we're sitting now below these moving averages. We've now got a little bit of free room to continue lower. So it's not unreasonable to expect that the dollar could continue to. It is sitting at a key level, so yes, it could find support here, that's true. But if we do continue through this, it's not unreasonable to expect it will continue down towards that sort of 102.50 and 102 level. If we have a look at euro dollar, again, we can see a bit of a spike up. We are still stuck, please just keep this in mind. We are still stuck within this pennant shape that is forming here. And but we want to see if we do break out of it. We're not out of it yet. So again, just taking notes so far, seeing a bit of a spike in the VIX, seeing a bit of a drop in the dollar. These are things that tend not to happen very often. And when they do, they're correlated. It's worthwhile starting to just sit up and starting to look a little bit more closely. But we're still seeing that the euro dollar is stuck within that move. If we have a look at sterling, so sterling had a real boost of a day off this level of support, coming back up to test the next level of resistance. We'll see now. If you look at it from a weekly perspective, we do have that uptrend, and potentially this week we could see a bullish candle form. And if that's the case, to me it's very interesting. It's not a really strong close, but it's a little bit of a rejection off this level. Could we see price continued back down towards these lows the coming week? It's possible, but this is a relatively strong uptrend, and so I'm just saying that I wouldn't be surprised if we get a bullish move to the upside, which would line up, of course, with that weaker US dollar as well, and the pound being relatively strong. And here you can see we don't have a clear trend on Aussie dollar, US dollar. The weekly chart has gone from an uptrend, has broken through that to the other side, and therefore it's broken these lows. It's basically got no clear trend at this time. Okay, so that implies as well that it's still stuck within a range on the monthly, but there is no clear trend at this time. So play it as it lies, but don't be surprised if it changes direction on short notice. And again, here was the same here with Kiwi against the US dollar. It has bounced off a level of support, so I'm just going to mark that level in over here. And so this is our level of support at the moment, but also producing those lower highs and lower lows that's coming in towards that level. And in fact, just let me have a look at something here. Yep, I'm going to do this. I'll tell you what I'm going to do here, get rid of this, and I'm going to move it down towards here. And that's really what we want to be paying attention to, is that level here on the monthly, just move it up a little bit there. And so we could potentially see a continuation down. We've got the lower highs, a lot of selling pressure. We could see a breakout to the downside here on Kiwi dollar, US dollar. Now, let's have a look at dollar yen. So dollar yen, really big drop. This is where I want to be paying attention to this. I spoke about this last week and I want to have a look at it here on a monthly basis. So let's just move this, get rid of that and clean this up a little bit and just move this over here. So this is an area where we could see a potential turnaround if the longer term trend is likely to change. The trend is up here and a big bullish candle here wouldn't be a really big surprise given the structure. But remember, of course, that the Bank of Japan have been talking a long time about trying to reverse this direction. And so we could be in the early stages of an actual change in trend on the monthly time frame. So what I'm going to be looking for this week is a break below, or a break of the low, or break of the high of this of the candle, or at least the weekly candle. Having a look to see if that happens. But if we do continue down, that also makes a lot of sense to me. But overall, the structure on the monthly is a good place for it to turn around, produce a bullish candle, and definitely worthwhile having a look at that. A weaker dollar is certainly going to put pressure on it to the downside. We've got dollar Swissy has broken through that major level of support, broken down, and you can see here we've effectively got a double top pattern within a downtrend. So there definitely is selling pressure. And again, that hints at a weaker dollar. And then dollar CAD, we spoke about this last week. Look, we're still at a major level of resistance here, but the trend to the upside is undeniable on a lot of the CAD pairs that are pretty good. And so for now, despite the weaker dollar, I'm expecting dollar CAD and the CAD pairs to continue to push higher. All right, so having a look here at gold, definitely battling with that 2440 level or 2450 level of resistance. The weekly looks good. I do like the fact that we did break and close outside of this range. So the power definitely moving a bit to the upside on the weekly, but that monthly continuing to show exhaustion. So again, I wouldn't be surprised if we do see a bit of a break below the low. And at this point, looking at the weekly chart, a break below the low of any of these candles would be a significant signal that we're going to see a much deeper correction. So just very cautious, not seeing a lot of good buying opportunities. We are looking good on the weekly. We've started to break out of this consolidation, but we're still overextended on the monthly. That is my concern. We very rarely tend to do that where we are overextended on the monthly and don't have a bit of a correction. So that's why I'm very, very cautious. And it also means that runs to the upside might not necessarily be that big. You get small short runs and then you get a bigger correction. Silver as well has come back down. This makes a lot more sense to me. Here we are back in this level of resistance, and this is a great place for it to stay and potentially form a nice support level, nice bullish candle before taking off to the upside. But you can see how the markets have sort of destabilized from a couple of weeks ago, where we spoke about the start of that swing high on the indices. We'll get to the indices in a moment, and you can see how the markets have started to shift their behaviors, become a little bit more erratic. It's almost more of a seasonal thing. I really don't want people to get hung up because this happens every single year when we start to have a bit of a big market correction and everybody's convinced that it's going to be the sky falling. And it's not to say that that can't happen, but it's a rarer situation. So again, natural gas continues to head lower here. Nothing about this trend ever changes. Let's move on and have a look at light crude oil. So light crude oil we had within that same, a similar triangular pressuring kind of a cornering point or a pennant shape that price is being pressured into. Here we can see it's heading back down towards the lows, but it is still stuck within that pennant shape, and it's the same for West Texas. They're still forming with that. This one's starting to push a little bit lower here, so the pressure definitely strong in terms of that. Let me just go through and just draw that in. So we've got a couple here. We put that there. We're still sitting at those. Would be interesting to see if we get a turnaround in crude oil this week and it works its way back up towards the top of that range, or if it just continues straight down, breaks below the previous swing low. That would be significant because that then implies not only is it broken out of the wedge, but it's broken out to the downside. So let's see if we get that. Now, let's move on to the global indices. And let's take this let's have a look at it from, have a look at this kind of with some perspective. Here we got a failed kind of breakout of this bullish pattern that tends to break out to the upside. It's still intact. What do I mean by that? I'm saying we still are stuck within this shape. Could it turn around? It could. It's not impossible. But at this point, if you're cautious, especially given the fact that it was a failure here, we've got this strong rejection. We didn't really go anywhere here. Then we've got the strong rejection, bearish engulfing candle. If you're cautious about it, let's see what happens. Breaking back down towards these lows is a little bit more significant. We've got some bearish divergence here, but it's already starting to flatten out here, meaning that we could possibly see another attempt to move higher. But given Our time proximity to September, which is usually a very bearish month, we could see more struggle happening here. So where I start to look at it now is on the monthly. This gives me a lot more perspective. The MACD is still trending higher, not looking so bad, but definitely you can kind of see we are starting to battle. So if I had to draw a level in, I'd sort of put it at about this level, and you can see that would be classed as a failed breakout. We could see price coming back down in towards this kind of low area, back in towards these old highs, or potentially back down to these previous lows. That's kind of the area that we're stuck with, which is also the moving averages. Right. Next up is the S&P. So we've got a nice strong downtrend on the daily. We are sitting in this area which I've highlighted in green, which is where the moving averages are here. This is an area where if we were going to get a weekly turnaround, as we have had in the past, that this would be a good place for it to form. So far, it has not formed. We're sitting down at the lows. Could it happen next week? Yes, it could still happen. We could see possibly that's the case. But this is, again, and I've spoken about this in the previous episodes, you can see here we have started a monthly retracement, and the monthly retracement brings us back down towards these sort of old highs, back down to the 5,000 area and 5,100, 5,175 area here. So we could see a bit of that happening, and a deeper correction here would make a lot of sense. So we could see another correction throughout August. I beg your pardon, another correction throughout, I was going to say August, then September, and then see a turnaround in October, which would put us about another 1 or 2 candles in here, and that would be very acceptable. So we would see something similar to this type of shape or pattern or behavior that we've seen in the past, and it wouldn't be that bad. That means we would have had a good correction. This happened last year, August, September, October, and here we could be August, September, October. Okay, so if it did happen, it is cyclical. That kind of thing can happen, and so let's adjust, not panic, and take this into account. In other words, let's talk about it from a different perspective. It takes between 6 and 18 months to go from a bull market into a bear market. It takes several months for the trend to go from an uptrend on the weekly, to a downtrend. So it's got to go from this uptrend over here into a downtrend, and that takes quite a bit of time. So assuming that we are going into something like that immediately now is ridiculous, because first of all, we haven't gone far enough yet to conclude that we're there. In fact, we still have to consider that we're simply in a monthly retracement. We have to. So you have to go stage by stage. And so the first thing you do is you allow it the opportunity. We've just come out of a bear market. It's statistically, not impossible, but probabilities wise, more likely that we are in a monthly retracement, seasonal, that happens every year, and that we're likely to see a turnaround around about October. That's it. Then we would potentially see if it continued, obviously between November and December, and continued down, then we would treat it as potentially as a bear market. But for now, we treat it as a monthly retracement. It makes sense. We've just come out of a bear market. It's very unlikely. It would maybe be a first that we go back into a bear market when so much of the US fundamentals are looking good. But it's not impossible. I just said that it's unlikely. Looking at the NASDAQ, same thing again. We've had a little bit of a fumble. We're having a deeper retracement. For now, I will treat this as a monthly retracement and highlight the area which is likely to be the area where it turns around somewhere within this green box. Okay, so that's what I'm going to be looking for. It's always the big drop, and it always happens in a big way. And don't forget, ladies and gentlemen, that corporations have been announcing record profits. So they're not struggling for it. Bonuses going out to CEOs have been ridiculous while laying off 10,000 employees, all kinds of things. So you get huge layoffs, but record profits and huge CFO and CEO payoffs. Payouts, that's ridiculous. That's not a sign of struggling. It's usually a sign of corporate greed. So let's kind of take all of that, mix it together, and see that what we're probably seeing here, at least initially, is probably a market correction, and then we'll deal with it if it is something more at a later stage. Russell here, having managed to break out and come back in, we'll see it's now on the outside of its original range. Let's see if it can recover in this area and turn around and then continue to the upside. We've got the FTSE as well, staying in this area as well. There was a really nice bullish candle last week, a nice bit of a bullish engulfing one, attempted to break higher, staying low. So I'm going to qualify this as still within a range. And if you look at it from a monthly perspective, we're still having broken out. We're still within a retracement on that time frame. Let's have a look at the German DAX. German DAX having a beautiful monthly retracement. Look at it. It's had a really good run. Encountered a ceiling, couldn't break through, and has now started a bit of a retracement. I've already highlighted this area where it could potentially find its turnaround point, and continue to the upside. So all of this from a monthly perspective makes a lot more sense. Here we could see it struggling, did manage to break out of its own pennant here, struggling a bit in this area. And again, bit of a retracement here back down would make a lot more sense. Okay, so all of these so far looking pretty decent. The Nikkei as well. This one you can see here, and I think it's worthwhile highlighting this area as a potential strong area of resistance. I'm going to do that. We could see it was an attempt and failed. Now it could potentially come back down, test these levels, or anywhere in this area. I'm going to mark that as well as a possible area of it turning around between now and December. Okay, so first thing we do, innocent until proven guilty. The market has to show us that this is something other than a monthly retracement, and it really hasn't had a proper monthly retracement in a while, so that's why I say that. All right, let's move on to equities of interest. All right, so here we go. We've got Anheuser-Busch still stuck within its bullish triangle forming. MACD just peaking over zero. It's not a guarantee, nothing in life is, but still looking bullish. Okay, so let's just mark that out, and there is our bullish triangle. It's trying to work towards a breakout. And again, it's a monthly chart, so a couple of funny months here. We still breakouts, carries on next year. At this point, we are still, by my definition, are still in a bull market. Okay, we would need to see several things change for that not to be the case. Apple running a little bit out of steam. Look at these, look at the wicks forming a little bit of exhaustion coming in here, a bit of a bearish candle. We could see a bit of a correction. It doesn't always have to come back down and touch the highs, just has to come back down towards these previous highs over here. Moving averages will run up to meet it, and we could see a turnaround. Okay, so for now, relatively happy with that. We've already got a bit of a bullish weekly candle, inside candle here. This is an area I've highlighted. All of these still valid to my mind for a potential turnaround point. Amazon, I beg your pardon. Amazon, what's interesting to me was just the attempt to break out here. I wouldn't call it a failed attempt, but it really has struggled beyond the previous highs, but it's still an area here we could potentially turn around. It's a good area, so I'll mark that from where we are here to somewhere around here and see if we get that turnaround in this area. Okay. AT&T, again, bumping up here, but still managing to sort of creak its way past these previous highs. A lot more bullish now on the MACD than it was previously. So still bullish, but any kind of a pullback here would be normal. No cause for concern there. ARC Innovation, I think you could probably guess what I would say about this. It's going to stay within this for now. Can't really see them. They're going to really have to mix things up to come out of this box because right now they missed the entire bull market run and they're still in this side in here. So anyway, ASML. Nice correction here. This is a good area for it to potentially turn around at. They've had a really good run. You can see the exhaustion sort of kicking in around here. So let's just see if they could stay above these previous highs over the coming months. And that's really it. Just 2-3 months. That's all they have to do. Looking at Glencore, this is in the UK. That looks like that is probably going to break down and come back down towards these previous lows. That looks more likely with when I look at these kind of the fact that it's already close to those lows. So let's see if we do end up coming back down to test that sort of 360 level. Tesco was doing incredibly well. It's got a good run. Any kind of a pullback here would make sense. Even a weekly retracement back into these highs, that would look really nice. If we could just see a bit of a pullback to touch the old highs, would be great. Doesn't have to, but if it does, it's just very symmetrical. It just works well. Definite failure here on the weekly. In fact, that we could argue that's even a failed breakout, and look at that kind of this reversal here. So this implies a deeper correction. The deeper correction again would be back down towards that 200 is a good place for it to do it. So let's mark the 200 place. Let's just kind of do this and see if we end up landing into this area as well. So Berkshire Hathaway will get hit a bit by Coca-Cola, but otherwise it looks good. This is a great area for it to potentially turn around. Again, it's also 2-3 candles. Maybe could be seen as a fail breakout, but I'm not too worried about it. But it does battle with that 438, 440 level. We'll see. It'll just sort of zigzag and sort of, I was going to say jog its way out. Look at this, Coca-Cola having a fantastic last week, almost going parabolic. They're doing really, really well. So they'll be due for a correction at some time. But again, not a sign of a marketing collapse, so to speak. Certainly not consumerism. BP here is starting to break a little bit lower, so that's okay. I'm going to get rid of this line. It's not the best one anyway. But yeah, so now I would like to see if we, come back down towards these lows over here. ExxonMobil struggling to break out, but still looking, relatively speaking, stronger than BP, but just going to stay within this area. We've got Estee Lauder. Estee Lauder, again, I was looking for that to see if we get a turnaround, but it's not. It's just creeping down and down and down. No change there this week. General Motors, big thing. Makes sense to me that we would see this potentially come back down towards this $38, $39 level, and we'll see if we find some support in that area. Morgan Chase, JP Morgan Chase, beautiful setup here for a nice correction back down towards these areas. So why did I highlight this? I forget, but it was the bearish divergence. So continued bearish divergence starting to show up combined with this, with exhaustion, starting to show up in the candles and a strong bearish candle. We could see a correction down towards this area. So let's mark this and see if we get a pullback into this area, if that's going to happen. And it would be a very nice look. It's had a really good run, nice little pullback and a continuation sort of around about Christmas time. Similar type of setup over here. Excuse me. Would get rid of that, and let's get rid of this one, and let's put in a fresh one over here. We'll just put in a nice fresh one into about this area and see what happens in that in the coming months. But for that, now looking more and more likely for a monthly correction. Here I would expect Adidas to sort of waffle around this area, possibly come back down towards that 200 mark before moving around. Meta as well, battling in this area. I think we're going to see a similar thing. I think we'll see, you've got, I mean, this is a very bearish type of setup here, guys. We've got clear higher highs on price and clear bearish divergence, but it's not just that. We're seeing lots of exhaustion and failure over here. So I think a correction a little bit further down makes a lot more sense. I think we could see a correction down towards that 400 mark when it does happen. Okay, so we can get rid of all these things. We don't need those. Clean this up a bit as we go. Then we have Morgan Stanley. Again, just managed to break out and is sort of getting knocked back down. So we could see this break back below this level into the moving averages area here. But these now looking to me, and I think you may agree with me, that we're now looking more and more like a monthly retracement. When you look at it from a monthly perspective, the pullbacks don't look that bad. They look like they fit within, you know, a lot of markets are overextended. They look like normal natural pullbacks, and that's why they should be treated as such. We've been due for one. We've been due for a weekly and a monthly. We've got a monthly, it looks like it, and that's okay. NVIDIA as well, very much due for that. Look at it battling there, beautiful pullback. And so what that means, we could see it coming back down into the sort of 100 mark. Sorry, I beg your pardon. 100 is not a bad place to be. It could actually even be as high as that. I'll actually move it up, maybe into the 100. Nice round number. It doesn't have to. Sorry, just trying to see if I can get it to the top there, but doesn't matter. And of course into this area. So all of that looks pretty good. And the beautiful thing about that is it's gone parabolic. That would go a long way to erasing that parabolic move. So could we see it have a deeper correction? Could we see have it a correction down towards say the 65? Yeah, and that would be long overdue and very healthy. Wouldn't have an issue with that. Netflix also, I think it makes sense for this to come back down towards these highs. That would be a bit of a double top, but looks pretty good for it to be able to do that. Let's get rid of this. PayPal. It's going to be similar. Again, to me, PayPal is going to be very similar to ARK. It's going to stuck within this range unless their core business changes. I don't expect much to happen there. And look at the exhaustion coming in here on Spotify. So just lots of wicks showing up at the top, just not enough buyers there to keep it above that level, lots more sellers. And so it does look as though we're going to see a bit of a correction lower. We've got bearish divergence, clearly the MACD hitting lower, failure in price action here. We've got a lot of that just not happening. And of course, we've got a double top. We've got historic highs where it failed the last time. So a pullback here down towards below that 300 level actually makes a lot more sense. Let's have a look. Let's put that in and see kind of where that puts us. There we go. So back towards the 50-period moving average on the weekly. Looks pretty good. Spider, also double top, now looking good. Sort of starting to pull its way back down. We've got FedEx. Also, I think we're going to see bigger pullbacks. But pay attention here because, again, when we see a level like this where it's double topping like that, it's worthwhile. Historic highs and such, we can often see a pullback. Tesla. So Tesla is going to be constrained in many ways the same way as everyone else. You can see it's bumped its head up against resistance. So let's forget about all the other stuff we talk about with Tesla. Simply put, Tesla has not really got any strong trends in play here. It is producing. It's got lower highs, higher lows. It is effectively in its own wedge. So let's draw the wedge in. Let's just treat it as objectively as we would treat anything else, so we could kind of see what that wedge is. And there's the wedge, which means we're back down and we're stuck within that wedge. And 200 is significant. Why? Well, because it's a big, strong round number, so we can expect 200 to be a support resistance level within this area. This is a bit of a mess, if you ask me. I need to clean that up. I think we should keep it on the bigger things. So I might just go through and clean this stuff up. Vanguard. looking good. Any kind of a pullback into the previous highs makes a lot of sense. This is a beautiful weekly chart. This is why I highlighted here, because could we see this week see a bullish candle? Yes, we could, but it is looking more and more likely that it is going to be a monthly retracement. And then finishing off with Walt Disney. Walt Disney is going to come back down towards the lows here. Okay, so that's going to stay back down towards these lows, heavy selling pressure. So Walt Disney is similar to PayPal and similar to ARK, where they've been stuck at these lows. Managed to break out a bit, bumped its head against the 50 period, and is coming back down towards these lows here. So still some heavy selling pressure on Walt Disney. Let's move across and have a look at bonds. Now we're seeing a spike to the upside. So this is something, by the way, that we didn't even see during the bear market as much. We didn't see an increase in Treasuries, a move towards Treasuries, a drop away from equities, and a spike in the VIX. Those are kind of three different criteria. We've got an increase in volatility, a move away from risk towards safety, going towards Treasuries, big spike in that, which we haven't seen in a while. You can see how slowly it was turning around. I've been talking about this for a couple of months now, slowly turning around, especially with EURUSD. So this is significant. Again, I want you to pay attention to this. This is the kind of thing I would expect when we're going to see a very big market correction, when we're going to see, not something that's doom and gloom, but possibly this is the kind of thing I would expect to see in a bear market. But strangely, we didn't see it in the last bear market. But I think I would pay attention to this. I think we are starting to see a little bit more of a correction here. Again, slowly catch a monkey, so to speak. Just cautious, not panicking, not assuming the universe is coming to an end, because there isn't enough data to support that idea at all. But it does show, for example, that we could be seeing, there could be companies, for example, that could be heavily overpriced or overvalued. We could be seeing a bit of a correction there. And of course, we've seen very little going in towards Treasuries. So we could, here's an argument for why this could be happening. Simply put, very wealthy people with a lot of money look for as much diversity in their portfolio as possible. If they felt, for example, that they haven't touched treasuries in years and that they're very heavily weighted on companies such as Tesla and Apple and so on and so forth, maybe Nvidia and so on, they could be getting to a point where they get a bit restless. They're kind of like, you know what, let's just take some out and diversify away from it. And we see the impact here in the markets, and we misread it as a bit of panic and so on and so forth. We always seem to credit the big money, so to speak, with being able to see the future, which is bollocks, which in actual fact what happens is they often tend to cause the stuff. So in fact, it's them actually starting to get a bit nervous, just like everybody else does, but they tend to move the markets because they simply have more money in the game. And so when they start moving across towards treasuries, it triggers a whole lot of stuff. So they are more of a cause and effect than necessarily than having some kind of gift into the future. That being said, I would say that the spike with this, combined with the move in VIX, combined with the correction, means that we should definitely see this as potentially as a monthly correction, not necessarily as the beginning of a bear market move or anything huge at this time. Remember, it's a 6 to 18 month to go from a bull market to a bear market, and there's not a lot of data to support any reason why there should be any massive issues. Okay, but there will be drama and panic articles out there, so just stay calm, keep an eye on the chart, look at the monthly, get a sense of perspective from the monthly, what is considered a big move, and don't compare what you're hearing and reading against what the monthly is doing. And if the monthly looks like it's doing everything within proportions, that gives you a sense of proportion. Okay, so let's have a look at Eurobond as well, also going to be spiking up. So we're going to see a bit of a move towards treasuries. It's not a bad thing. In the past, normally it would have been a 60-40 or 70-30 ratio between treasuries and stocks anyway. And in fact, lately it's been more like 90-10, where it's been almost all equities. So seeing a bit of a correction, as far as I'm concerned, is a good thing. Okay, so all looking good there. We've got Bitcoin, which is hovering down towards potentially a bit of a deeper correction here. It looks okay. I'm not too worried about it, but it is going to come under pressure as everything else will. So we could see it kind of move a little bit low. We could see Ethereum also heading into lower highs. So we could be building up towards a breakdown to the lower side. We could be seeing that possibly happen. So let's just go and draw it in as a possibility. Again, for the most part, if we get a correction this week, everything changes. But just highlighting here, then we could be, working towards a bit of a breakdown. So we'll see if that's the case. That is not a high probability thing. It's just something to be paying attention to. Okay, we've got Binance, which is this range bound for the most part, and you can see its behavior here on a monthly. We've got Solana, which is sort of wedge bound here, probably okay, and Cardano. So one more thing I would add as I wrap up here is that don't get the idea that somehow cryptos are immune to the whims. Part of the reason that cryptos have grown so much in the last few years is big money, and big money is always going to be stuck in stocks and gold and various other things, and the US dollar, it's just a whole other game at that level. And so a lot of people misread that. And so just be very careful and wary that if people are selling you stories on about how crypto is, it's a different world out there, BRICS, cryptos, dollar collapsing, all kinds of things. A lot of that is misinformation. Okay, so we're not there in any of those stages yet. But it's going to spike. A lot of that information, misinformation and disinformation is going to spike if we have a bit of a correction now. So at this time, my analysis says we are seeing a monthly retracement, which makes sense, which we're overdue for, which is seasonal. It's that time of the year. And we'll see where we are. If in December we've had a really nice correction and we see the market start to recover, then that's kind of where we're at. So at this time, cautious. If I'm exposed heavily, I might reduce my positions, do that. But for example, I'm not looking to get rid of anything potentially in my portfolio just yet. If everything has been performing well and this is a retracement, I would treat it as such. With that being said, let's see how the next week goes. Let's keep an eye on things, and that's it. Have a good one and stay calm, keep calm, and carry on trading.